So, Tesla announced plans to offer what it calls more affordable models of its electric vehicles as it posted results that missed Wall Street's expectations and were well below the comparable 2023 period. I'm here, Rosemarie Miller, with Seth Goldstein, an equity strategist for Morningstar Research Services. Seth, Tesla's results were weaker than analysts had forecast, and they were forecasting big drops from the first quarter of 2023, but its stock is up a bit in late trading. Can you explain what's behind that?
I think the market's taking a forward-looking view and is reacting positively to two key things. First, the affordable vehicle, where there have been questions on will this continue? Will it be launched? Will it even be produced? Tesla answered those questions in the press release, saying they plan to accelerate the development of the affordable vehicle, which will be the catalyst for Tesla's second big wave of deliveries growth. Then I think they're seeing milestones on the full self-driving software, which is a key reason why many drivers choose a Tesla over another luxury electric vehicle due to the development of the software that is supposed to continue to get better and better and allow the car to do more driving of itself. So during the quarter, we see Tesla was able to recognize more revenue from the full self-driving software because they hit a key milestone of releasing the ability for the vehicle to park itself, which had been a goal that CEO Elon Musk had promised, a few years ago.
And so let's just talk about electric vehicles overall. It seems that an interest in electric vehicles is kind of fading, and we can see that, in the sliding sales numbers. So there's a lot of good reasons to want to move away from oil-powered vehicles. Is this just a short-term trend, or is there something more?
I think it's really just a short-term slowdown because many of the electric vehicles in key markets such as the US and Europe, we're only seeing EVs in the luxury auto space. And that space is saturated right now. And it's generally a smaller space in terms of number of vehicles versus the broader global auto market. And so in the US and Europe, we're seeing these are still largely subsidy driven markets where there's not that many affordable vehicles. You need subsidies to give consumers the price incentive to buy one. And then we're seeing a lack of high powered chargers located along highways. And so many people still have what I like to call road trip anxiety, where you heavily weight the ability or maybe the lack of ability to take a road trip in an EV if you don't readily see many fast chargers along places you normally stop, such as highway travel plazas. Whereas if you look at a market like China, they're a more advanced EV market, and we're seeing EVs continue to grow at a double-digit pace where there's not even federal subsidies in place, but they have a high-powered charging network. There's affordable vehicles in all vehicle category segments that are priced competitively with internal combustion engines. And so I think the US and Europe are seeing a larger slowdown due to the fact that we don't see the affordable vehicles and we don't see the fast charging network built out. But these things are coming. Affordable vehicles are being developed by many automakers, including Tesla, and we're seeing more high power chargers get built along highways. And so these markets will continue to grow, but it's not going to be a straight line, solid growth every year. We're going to see some years with higher growth, some years with slower growth. And right now, we're just in a period of slower growth in markets like the US.
You are absolutely right about that. I do not see electric vehicle charging often. And sometimes, even in New York City, I'm like, where are the gas stations? Well, Seth, you kind of touched on it, the competition. Could you give us a little bit more details into the electric vehicle competition that Tesla faces?
Yes, so Tesla had a great ability to be the incumbent. They made EVs cool over a decade ago, and they developed the Model 3 and Model Y, which have become some of the best-selling vehicles globally, even if you include all autos with internal combustion engines. But now competition is coming. Automakers are rapidly electrifying their fleets. And so we're seeing competition from new automakers in a market like China. BYD is selling many EVs. We're also seeing traditional automakers, your Fords, your GMs, Volkswagen, BMW, increasingly add more EVs and more models to their lineup for consumers. And so now there is a much broader range of options at a comparable price point. So now Tesla is not the incumbent. They don't have that first mover advantage anymore. Now they have to make the case of why you should not only get an EV, but why you should choose a Tesla over any other EV on the market. And that it's on Tesla to do so with increasing competition and new models only to get launched every year.
So speaking of, comparable models, how about making the cars affordable? Like, how low can Tesla actually go with making these cars more affordable and still having them be something that people really want?
Yeah, I think we will see Tesla continue to reduce their unit costs each year. And so I think we will start to see them be able to offer more affordable vehicles, and we'll see comparable price points to internal combustion engines. If you look at, say, the affordable vehicle market, so you might see something like a Tesla sedan that is eventually priced competitively with a Toyota Camry, or a Tesla SUV priced competitively with a Honda CRV, or that sort of more affordable mid-size SUV segment. So I think that's where we'll get. We may not see a Tesla ever priced as cheap as, say, a Toyota Corolla, but when you're looking at the purchase price with an EV, you also have to remember that you're going to save money from electricity being cheaper than gasoline and lower maintenance just from fewer moving parts. And so I tend to look at EV ownership on a total cost of ownership basis, but I know many consumers are very focused on that purchase price. And so I think if you're looking with the affordable vehicle market, your full-size sedan like a Toyota Camry or your mid-size CUV like a Honda CRV or Toyota RAV4, those are going to be the markets where you see Teslas or other EVs start to be more competitive at first.
Well, Seth, I'm sure you saw that Tesla announced its plans to lay off about 10% of its workforce. How will that affect its ability to offer new models and updates to its existing lineup?
I think Tesla is really looking at how to be more efficient and how to maximize profitability and preserve cash flow in the wake of slowing sales. So we did see a 10% layoff announced. I think a lot of that was corporate overhead, some manufacturing jobs, but some management jobs as well. And so I think Tesla is really looking at their entire operations and saying, where can we be more efficient? Where did we hire for perhaps expecting growth in 2024 and 2025 that now we don't think will materialize as fast as we once thought? And so they're looking to be more efficient during this period of slower growth. But I don't really see the Tesla firing people that would impact its ability to develop new vehicles or iterate the full self-driving software, or really grow production once they're ready to expand production again. And I think Tesla can quickly rehire if they did see the growth coming back quicker than they anticipate.
So I remember seeing on social media one day, there was a bumper sticker and it said, I bought this before Elon went crazy, and it was on a Tesla. And these are not my words. Let me put that out there. This is the bumper sticker. What are your thoughts on Elon Musk being the CEO right now?
Yeah, Elon is a very polarizing figure. There are the Tesla fans out there that no matter what Elon says, seem to cheer his remarks and seem to get behind it. And then there's people who are saying, I'm not really a fan of his political, musings on Twitter or X, whichever one you want to call the platform. And, that may turn me off from buying a Tesla. When we look at the data based on Wars Auto during the first quarter of 2024, Tesla grew its US sales, but at a slightly lower rate than the growth of EVs. And so perhaps that is weighing on Tesla's growth rate. But right now, I don't view it as hampering Tesla's ability to grow in the US. But the more and more that Elon Musk wades into controversial political topics, the more that he risks turning consumers away from Tesla.
This has been great. Thank you so much for joining me today, Seth.
Thanks for having me, Rosemarie.